Good morning, everyone. Welcome to Windsor Brokers live daily market outlook for Thursday, 20th of September 2012. A lot of negative action seen in the markets in the past 2 days, and especially accelerating today as a series of PMIs already released or due to be released today, and those that already came in quite disappointing levels that brings actually, they puts the additional pressure in the markets as we witness the early mornings action on euro that slid so far to 129.50. Sterling is down to 161.70 zone. Gold and the crude oil are also in the down moves. The crude oil hits $91 per barrel, November's contract, while gold dips again down to 1750 support zone. China's manufacturing PMI basically came in quite disappointing, 47.8, slightly above the previous release at 47.6, but still not a satisfactory level, showing that PMI manufacturing contracted for 11th consecutive month in a row in September, according to the surveys of the factory managers that indicated the world's second largest economy remains on track for a seventh quarter of slowing growth. As said, the HSBC flash China manufacturing PMI index showed activity stabilized in September after hitting a 9-month low in August, with the headline reading ticking to 47.8, as we mentioned, from 47.6 in the last month. But while the economy may not have worsened, there were few signs of fast turnaround. Rather, the PMI, which provides the first glimpse of September's conditions for Chinese industry, pointed to a month in which a slide was halted but not reversed. The September's reading extends the longest period that the PMI has been below 50, the value that separates contraction from expansion, since HSBC began compiling this survey in 2004, and there was a broad studying across the sub-indexes in the survey released during the Asian session, with exception of output, which dipped to its lowest levels in the past 10 months. As said, the series of PMIs due to be released are already released, showing that French manufacturing PMI came at 40 today, very disappointing, 42.6 compared to 46.5 forecast and 46 of the previous month. Also, the services PMI in France came at 46.1 versus much more optimistic 49.5, and the 49.2 of the previous month being one of the first triggers for a euro's fresh slide at the opening of the European session. As mentioned, the euro is now below 129.50, while dollar appreciates, and the dollar Swiss is currently above 93. Handle 93.30 is the current level, while the commodities are in the steep down move. Regarding today's calendar, that is also due to show a number of PMIs. We're going to take a look. As said, the French came at 40. Let's just take a look if we have the fresh update. Not yet. Anyway, French came at 42.6, manufacturing 46.1. The services PMI I had still to come in a few minutes. Actually, the Eurozone, the German services manufacturing PMI for September forecasted at 45.4 versus 44.7 in August. Services PMI 48.7 forecast compared to 48.3, and at 8 o'clock, basically it's 7:28 and 7:58. The times are slightly incorrect in our site. 2 minutes before the half and the full hour. Eurozone flash manufacturing PMI for September is again slightly more optimistic from the previous release, 45.4 versus 45.1, and the 47.4 versus 47.2 in the services PMI. We have still optimistic forecasts, but if we follow the trend from China and France especially, then quite surprising and disappointing releases might be seen in the in a few minutes, when in half an hour approximately, when they will be released. So there is a quite a big warning about this. Anyway, as most of the PMI stay for a quite a long period of time below 50, this is a quite clear signal of further contracting of European economy, with no signs yet, of course, of any stronger and more serious improvement. Further, during the day, 8:30 GMT, the UK retail sales for August, 0.4% forecast, slightly better than July's release at 0.3, and the from the US weekly jobless claims due at 12:30. Expected to decrease following last week's unexpected jump to 382,000. 370,000 is the today's forecast. And then again, PMI from US manufacturing for September, 51.6. A slight improvement is seen on the today's forecast compared to August, 51.5, as US PMIs are still above the 50 barrier. At 1400, this is at 1300 GMT. At 1400 GMT, as you can see on the calendar, Eurozone's consumer confidence still quite a negative outlook. A slight improvement based on the consensus of -24 compared to -25 in August. Philadelphia Fed manufacturing index is due at the same time for September, -4.1. Improvement from -7.1 in August, and at the same time also leading US leading index for August, no change expected versus 0.4 increase in the month of July. And the ECB President Mario Draghi is due to speak at 1600 GMT, so late hours of European session. And that was all for today's calendar. Quite busy calendar, quite important releases. I would like you to pay attention to all these releases, and this is going to be quite good indicator. And based on the things that came already from France, I would say the outlook is quite grim for the rest of Europe. But of course, we have to see the releases first, and then to judge whether it's better or worse. But in any case, as most of the indicators are economic indicators are still standing below 50 barrier, quite negative outlook is seen for the Eurozone economy. Quick look now at the markets and our charts to see where we are standing now and what are the expectations for the coming day. As said, Euro is in the near-term downtrend following upside the rejection and the formation of near-term double top at 132.70 zone, with steady decline retracing so far over 61.8%. Basically, the morning's overnight low was around 129.71. Fresh extension after opening Eurozone and the acceleration on the French negative data has seen dip so far to 129.40, being in the steady downtrend and turning the near-term focus completely to the downside, as we lost the initial 130.30 and 130.00 support with the brief corrective action. This was basically yesterday, dip on to 129.92. Quick recovery bounce, did not see much of the action as the previous high and the lower boundary of strong 130.80, 131.00 barrier capped the upside on the second attempt. Further pressure was put on the pair that is now in the again descending mode, and most likely 129. This is what we mentioned in our yesterday's comments in this live session, and as well as in the written ones, that near-term risk would be seen on the loss of 130 as psychological support to turn focus towards another important level at 129.00 zone, where we have the approximately 38, close to one. This is basically it's 129.20, 129.00, 55 days exponential moving average, 38.2% retracement of the larger upleg from 125 to 132.70, as well as surround figure support. And I would say at this stage, this could be seen as a trigger for a stronger reversal of a larger uptrend of euro dollar from July 2012, from low at 120.42. that approach the important resistance at 132.82, stalling just on approach to round figure resistance at 132.00. As also the daily studies started, the daily indicators started all to point lower. Most likely scenario would be further retracement of the past 2 months strong rally, with the significant levels seen also at 128.27, where the 200 days moving average currently stands. And the cable also follows the euro in its latest move, as easing of 162.72 double top posted on 17th and 19th yesterday, September, has seen upside rejection just under our important level and the near-term target at 163.00, with the corrective action probably preceding a fresh extension of the larger uptrend of the pair. As mentioned, the acceleration was seen on a break below 162.00 as round figure support, and 38.2% retracement of up move from 160.74 to 162.72 as this morning's dip reached 161.62. The upside for now remains well capped at 162.35. This is also previous range top, along with the 20-55 days moving averages, as the faster one already crossed below the 55 days one, putting additional pressure, and seeing this level as quite good resistance and expected to cap for now. A further extension lower would look for a 161.50, 61.8% retracement, and then 161.00 is around the figure support, along with the 160.80 of 38.2% of the larger 157.69, 132.72 ascent. So basically we have 161.50, 161.00 and 161.80 seen as the near-term downside targets, as the negative tone continues to dominate on the lower time frames. The downside remains focused in the near term. Any corrective action, as hourly studies are already oversold, faces initial resistance at 162.00 and more significant, the previously mentioned one at 162.30, 2030 zone, the seen as a near-term breakpoint, and basically lift above 162.35 would be seen as relief for the pair, and avert immediate downside risk in favor of a possible fresh revisit to our recent peaks at 162.70, and of course possible extension up to the our short-term target at 163.00, 30th of April 2012 swing high. And the dollar lost ground following a upside failure at 79.21. It basically hit the daily Ichimoku cloud top that capped the upside, and just ahead of 200 days moving average at 79.30. So basically upside rejection at these levels has triggered a sharp reversal and sell-off that so far dipped to 78.03. This is our initial support and psychological and the round figure level, retracing close to 61.8% retracement of 61.8% of the initial recovery rally from 77.12 that peaked so far at 79.21, as the hourly studies turned into negative territory and currently emerging out of the oversold zone. Some corrective action is seen, likely preceding a fresh leg lower, with the initial resistances at 78.25 and 78.45 reinforced by bearish crossover of the moving averages, as well as 78.55 is the previous consolidation top, and these levels are seen as quite good resistances, and according to the current situation in the near-term technicals, expected to cap any stronger corrective action, while lift above 78.55 would be signal of fresh strength, with the regain of 78.80, 9 required to confirm, and 10 focus again higher. Otherwise, the likely scenario would be fresh extension lower. 77.92 is the 61.8% retracement, loss of which opens approximately 77.50 zone, and then our key support at 77.12. For our studies are in the descending mode, and the loss of momentum is evident as the pair slides sharply following upside rejection at 79.21, while daily structure again remains weak as long as the price action holds below 79.30, that is 200 days moving average, with more focus currently seen at the downside. Only break above 79.30 and more significant top at 79.65 is required to improve the larger picture outlook. And the last from the majors, dollar Swiss has finally broke above the recent congestion consolidative range between 93 and 92.37, 92.40 approximately, just off the recent low at 92.37 posted on last Friday, as the pair remained 3 days congested, with yesterday's brief break above 93 proved as a false break, as the price dipped back to 92.61. This morning's fresh action has so far seen 93.34, signaling probably some stronger action, as hourly studies are now in the positive territory, with the 4-hour ones also improving. We mentioned yesterday, I think, that were quite oversold, and that would be initial signal, but we said that break above 93 as initial resistance was seen required to spark some stronger recovery. As mentioned, the initial break of initial barrier now looks for a test of the next important levels. Pardon, I think we are a bit on the 4-hour chart. Okay, we have the 38 point, we have the static resistance at 93. This was the initial that has now been dented, along with the 93.50, the descending 55 days moving average, and 93.67, 38.2% retracement ahead of very significant 94 zone, where is the round figure resistance, 50% retracement, and 94.16 previous high of 13th of September, a break of which is basically required to confirm the near-term bottom and allow for some stronger recovery. Otherwise, risk will be seen on a lower top on any rejection under 94.16 and fresh extension of the larger down move from 99.70, 24th of July 2012 peak that so far dipped to 92.37, as the pair now attacks at the broken longer-term trend line at 93.30. The next significant barrier, as said, is 94.00 with the 200 days moving average, and the previous peak at 94.17. More focus at the near term, of course, is seen on the upside, but still we need to see a gain of some previously mentioned levels in order to confirm, as larger picture remains quite bearish. This is seen as the corrective action. The crude oil remains in its strong fall. I think it's better seen on the daily, following a recent brief break above psychological 100 level that peaked at 100.72, and the sharp sell-off followed, with acceleration also seen on a break below important 94 support. First 96.53 200 days moving average, and then a 94 higher platform that so far dipped to 90.95, just below the 38.2% retracement of the recovery up move from 77.27 to 100.72, and this is seen as the first signal of possible further easing with the break of 55 days moving average at 92.63. Now looking for test of 90 days one, which is at 89.77. Of course, Before this, we have two round figure supports at 91 and 90, and 88, 84 is the 50% retracement. Next significant static support is the higher platform of end of July at approximately 86, 80, 87, 30 zone, 87 zone, I would say, seen as the next very significant support. As studies in the daily chart continue to point lower, more focus is seen towards the downside, while the negative tone and quite extended conditions are seen on the hourly and the 4-hour charts, with the hourly started to point higher, signaling some probably brief corrective action. Initial resistance is overnight's high at 92.45, but more significant is seen 94 at 94.00. Previous strong support and the higher platform, and the break above 94 is basically to ease the current bear pressure and provide temporary relief. And we have the yellow metal that basically it's still within the range following a strong rally that peaked at 1779.00. This was yesterday, but strong downside pressure still keeps push the pair upside rejection, push the pair lower. We are talking about three wave phase at this point. As the trading is in the sideways mode, we have the wave A, wave B, and the wave C following upside rejection. I think that the likely scenario would be extension to initial support at 1752 approximately. This was mentioned in our yesterday's afternoon commodities report, where I mentioned is as long as I remember, return down to the base of the current range at 1752, with the market so far proving the theory 1758 seen so far. Basically, the hourly studies are still in the rather neutral mode, while the 4-hour ones are descending, showing quite a negative tone and seeing potential for the extension down to 1752. Support is also reinforced by ascending 55 days exponential moving average, currently at 1747. At this point, break below 1750 as initial support, and another significant 1725 and 1717 would be a signal for some stronger corrective action. So far, the bulls on the larger picture remain intact despite quite extended conditions on the daily chart indicators. Yet no firm signal of reversal being generated, with break, as said, of initial 1750 and the other significant 1725-20 zone seen as a trigger for possible further reversal. Otherwise, holding above 1750 would keep the upside in focus, and will likely look for test of our next very strong resistance zone at between 1790 and 1802. And that was all for today from my side. Please, if you have your questions, I would like you to submit them now. Of course, at our beginning page, you can see the email that you can submit any of your comments, suggestions, feedbacks, questions, anything you find interesting and you think we don't cover, or you would like to suggest some new services. Please don't hesitate. You have the email analysis@sponsorbrokers.com, and we'll be glad to answer and try to help as much as we can. Do we have any questions now, please? Welcome for this. I hope that I cover actually most of the most interesting parts. Of course, if you have any other instrument or any other question, please, this is the time now where you can submit them either online or you can do it through email, and we'll do our best to give you the best possible answer. Okay, it seems that we have no questions for today. As said, keep an eye on today's releases, as I think PMI is already released from Germany. We are going to just take a brief look to see what were the results. Basically, German came in quite optimistic. Release 47.3 is the manufacturing PMI compared to 45.4, showing that German economy is on the right track, while services PMI jumped above 50. 50.6 is the release compared to 48.5 forecast. It seems that I was slightly wrong with the negative expectations, although I mentioned I think that Germany might be excluded from this. The next important one is coming in approximately 20 minutes, and the Eurozone one. As the positive trend is now establishing with Germany, we hope that Eurozone 1 will come in some better mode, although according to the previous releases, looks quite unlikely. Anyway, keep an eye on today's releases, as we have a number of important economic indicators, especially the focus on PMIs. And of course, I would like to thank you for attending our session. We will see you again tomorrow morning at regular 7 o'clock GMT, 10 o'clock local Cyprus time. And until then, of course, I wish you a nice day and very profitable and successful trading. Good luck.